I know you mentioned before a term called seasoned funds, and when talking about down payments. So why don't we expand on that? Break down what you mean by seasoned funds.
This is really important, Matt, and there's a reason I wanted to cover this today. Right now in our market, we see people having to put down sometimes a larger down payment than they initially planned. Everything's so competitive that sometimes people are going over asking price for a house and they have to come up with some of this money. Well, it's not as easy as just putting together money, asking family and friends all the time. So when we talk about seasons funds, what we're talking about is what your lender will allow you to use for down payment. Your lender does more than just tell you to come to closing with a certain amount of money. They have to make sure that the money that you do come to closing with is legally allowed to be used for that purpose. And that confuses a lot of people because why in the world would someone not take my money? But they're actually legally required, us as lenders, we're legally required to verify and paper trail any funds used in a real estate transaction. So most of the underwriting process is entirely based around, can this individual repay the mortgage if we make this loan? And that's what 98% of it's about. The small 2% is about money laundering. And that's actually the issue, is money laundering when it comes to this. So as recently as 2012, there were extremely exploitable aspects of the mortgage process that allowed for relatively easy money laundering. And this was happening fairly rampantly. So, you could have high dollar transactions where individuals could launder and clean and really potentially millions of dollars just in one transaction. So the federal government caught on to this, and this was a smaller but still contributing factor of the previous housing crisis because there was a lot of bribes going on to keep this sort of thing continuing, and that had detrimental results and consequences in the real estate market. So due to current financial federal regulations, the underwriters scrutinize all the funds that you use in order to mitigate this illegal activity. Keep in mind, the underwriter, when they're looking at your file and they're trying to approve your loan, they don't know you. It's not personal. They just have to do this to prove that you're not using illegal funds to close, like drug money or terrorist funds. Like these are real things that they're looking for. So that's the whole thing with seasoned funds. So seasoned funds mean that you are going to show where the money was sitting for the previous 60 days. So if you pull money from somewhere, it needs to be in your checking account for 60 days, your saving account for 60 days, or at least a paper trail between where it's moved.
I got to say, that's pretty interesting.
It's a different aspect for sure.